Hi guys, my name is Gil. Welcome to Crypto Time channel. On today's video, I'm gonna answer a couple of questions that all investors might had or might have. So consider subscribe, hit that bell to get the latest from our channel. Follow us on Twitter, Instagram, and let's run the intro. Hi everybody, I hope you're very well today. With no further ado, let's share the screen. So I want to answer some of those questions. So the first actually there is, have you ever asked yourselves, some of those 6 questions? So first one is, why is financial education important? So I want to go deep on that subject, but financial education is key for every investor's life. Okay, so I know most of us didn't get that from college, from school, or even from our parents. So please do your own research and check that. Learn about financial education. We're gonna talk about some of elements of it, but go and do your own research, right? That's the core. Okay, so the second there is, do I know where to invest my savings? So we know that it's important to save money. That's fine, but it's not enough. So we have to make sure we are investing our money, okay, our savings. And I'm gonna answer that another question in a few minutes. But it's important to invest in your savings. Okay, don't let your money sit on a bank. All right, don't do that. Okay. The third question is, funds or other bank products are the only investment options out there. So some people, they believe only some products coming from bank are the options they have as an investment portfolio, and that's not true. There are lots of options out there. We're gonna talk about that in a minute as well. So the next then is, the person is prepared to invest in a better risk return market, let's say crypto market, but don't know how to do it. So we are here, bringing content, just to free content to help people to better manage and better understand the markets and know how to invest their money, especially here in cryptocurrency, but that applies to other markets as well. So the next question then is, how do I know when would be the better time to buy or sell my assets? Again, we here are being releasing videos with strategies, and concepts to help people to to learn how to read the markets, how to understand the markets. So then we can go to the last but not least a question, which is, so you have your own profession, so you have your family, you have kids, you have all those things going on in your life. You don't want to become a professional trader, anything like that, but however, you like to manage and to take your own decisions. Of course, I'm not a financial advisor. That's fine. You can always go to your financial advisor and ask for advice, and invest your money through your bank, and so on. Okay, but I believe it's important for us to understand and to take the lead, when it comes to our money. So know how to manage and know how to take our own decisions is very important. Okay, so that's why we are here bringing content to people, just to spread the word and to help people to understand the markets and to help people to take their own decisions. Okay, so let's move to the next slide. So here we have three key questions. So why, where, and when invest. Okay, so let's go to the first one, which is the why invest. So I won't take long on that slide, so I just want to go and show that picture, which basically is showing, the yellow bars showing, the let's say the regular deposits, regular savings accounts. So you're gonna have a more conservative, interest rate throughout the years. Okay, so on the other hand, we have the purple bars showing, the interest on interest. So that's called compound interest. Okay, so it's this snowball effect going on there. So you're gonna invest your money, you keep reinvesting, getting a better risk return, and then over the years, we have a big deal, which is the interest on interest. Otherwise, you have a very small interest throughout the years. And so to summarize that, guys, why invest is to put your money to work for you. Okay, put your money to work for you. That's the idea behind that. Okay, so let's move then. So here's top 5 reasons that might vary depend on the person, but it's fair enough to say those 5 reasons. Okay, higher investment returns. So again, you're gonna invest your money to get better returns in the future, long term, medium term, whatever it might be. The second one is a retirement plan. So you want to make sure you have a good retirement plan, so you don't actually depend all on your retirement from a government, or from a fund or something like that. So you have to to have a better retirement plan. So then tax efficiency and beat inflation. Beat inflation is very interesting to talk, because especially nowadays we have the inflation going through the ceiling, and we have to beat inflation, because otherwise your money will be corroded by inflation. Okay, so if you leave your money on the bank account, what's going to happen is inflation, so you're gonna lose your buying power over time. Okay, so inflation will corrode that money that's sitting on a bank. So you have to get rid of cash. As they say, cash is trash. So get rid of cash, allocate your money, put your money to work for you. Okay, then reach your financial goals. So that depends on the person. So could be buy a new house, or your first house, or land, or a new car, or take a vacation somewhere, whatever it might be. You can reach that goal putting your money to work for you. Okay, because you're gonna get eventually better return doing that. Okay, so let's move on then. So where invest? So here we have just a picture to show you. Bitcoin is leading that 2021 performance, so almost 60% overall, against, let's say, SP 500, which is 27%. So it's just to show that we have different assets or classes of assets to invest. So we have cryptocurrency, and then within that we have Bitcoin and altcoins, and then we have commodities, real estate, stock markets, and so on. Okay, ETFs, you name it. All right. So, but however, you have to make sure you understand and you know what kind of or what type of investor you are, because if you are not willing to see the markets going up and down in a volatile market, so you might have to start with more conservative products, let's say those offered by the banks, and then you can start touching the grass with small amounts, and start touching the grass with stock markets, and then cryptocurrency sometime, because it doesn't worth the hassle, okay, to lose your sleep. All right, so you have to make sure you understand that. So don't get sick, okay? Don't get sick seeing the markets maybe crashing, and then you going crazy. Okay, so don't do that. Know yourself. Okay, so but let's move to the next one. But the types of assets, we have stocks, we have real estate, investment trusts, we have ETFs, cryptocurrency, commodities. Those are in the volatile markets, but also we have, you could invest in land or properties. You could invest in, art, baseball cards, rare items, or whiskeys or something like that, cars, whatever might be. And I'm not gonna go through the liquidity concept here, but I just want you to understand that there are a lot of opportunities out there when it comes to investment. Okay, so there are a lot of assets out there for you. So the next one then is when invest. So we have 4 points to make here, okay? And those are part of the financial education. So the first one is to have financial control. And then, so do you have enough money to cover your essential monthly expense? So because you have to have financial control. What that means is you have to, you never, so I'm going to stress that, okay, guys, you never invest money that you need for living. So never invest your money that you need for living. So first thing you have to do is to pay all your expenses, all of them, whatever might be, rent, mortgage, your groceries, electricity, gas, everything, your leisure, travels, everything. So you pay everything, and then of course you have to save money, because you shouldn't spend all your money, all your earnings, okay, every month. You shouldn't do that. So you have to to find that balance, so you could save some. All right, so whatever amount, doesn't matter. Of course, the better is if you can save more, the more you save, the better it is. That's fine, but you have to save money, okay? And so to do that, you have to have financial control. So the second point then is financial planning. So you have to ask yourself, do you have, or do I have debt? I know not always debt is bad, because you could have debt with low interest rates, but that's not the case here. I'm not gonna go to that subject right on this video. But what I'm talking about here is for those who may have tons of cards, credit cards, loans, and everything with with the banks, with high rates, okay, interest rates. So get rid of those. Okay, do yourself a favor. Get rid of the high interest rates. So you have to solve that first, because you cannot invest your money if you have high interest rates, because that will eat every single investment you have. So it will not make sense to invest first. So you have to balance and to control your financial life first. Okay. The third point then is emergency fund. So do you have one? So what actually is an emergency fund? Because let's say you can save 20% of your earnings. Okay, so you're not gonna invest all that. Okay, because even when we plan, we know sometimes life, we can get caught with the low guard in life, and then we might need some money for an emergency. So we have to make sure we have that liquidity, we have some money for emergency situation. Okay, so you probably gonna pick that 20% and split, and then you're gonna do that math, but split that money, invest the majority of them, that's fine, but a portion you keep for emergencies. All right. And the last one, and not least important, is the peace of mind. And again, would you be comfortable if the market drops and you see your portfolio dropping by, let's say, 10-20%, even more in crypto, 3%, whatever? So if you will lose your sleep, so start with more conservative investment, and then you keep working on the ladder to get to more volatile markets with more risk return ratios. All right, so doesn't make sense, and it doesn't worth to lose your sleep, to get sick, seeing the markets moving a lot. So keep that in mind. And I believe now it's time for giveaways. So guys, again, part of financial education, first thing, guys, first of all is right, invest in yourself. Right, that's the first rule. Invest in yourself, because you have to invest in yourself to get more of your profession, to get more out of your business. So invest in your business, invest in yourself, so you can have more funds to invest. So so that's the main rule here. Okay, invest in yourself. So okay, so another takeaway is never, and I think everybody sometime in life heard this phrase, this expression, which is never put all your eggs in the same basket. And that's true, because that rule applies to every market. We talk about crypto here, but our concepts, most of them apply to stock markets as well. So you have to make sure you have you diversify your portfolio. So if you're gonna go to the stock market, make sure you have different assets. So you buy different companies in different sectors, because if a sector plumbs, so your portfolio is safe, because eventually every single investor will lose at some point in some of their investments. Okay, but the idea is to win more than you lose. That's the logic behind. Okay, so, and to do that, and to be on the safe side, you're gonna spread your investments in different baskets. Okay, so spread your eggs in different baskets. All right, so have a good portfolio with 15, 20 assets, 25 assets, whatever. Okay, but do that, and invest. The last takeaway is invest regularly, because you have to get the habit of investing. So as you pay your bills monthly, you should have that habit to invest as well. So again, you're gonna pay everything, you're gonna live your life, and then that money which you like saved, part will be to your emergency fund. That's fine, but the majority might go to your investments, and then you're gonna do that monthly, or from time to time. But you do that, and then you have the habit to invest, and over time you're gonna see all those profits working for you, and you see better return, okay, doing that. Okay, so guys, I believe that would be everything for today. I hope you enjoyed the video. Please let me know in the comments down below what you think. If I might missed something, please let me know. Share your thoughts, and see you on the next video.